Hello and welcome to Crux Investor. We joined Gord Glenn in camp today where he armed me with bear spray and a machete and took me through their drill plans that they're planning for this season. If you want our thoughts and opinions on the conversation, indeed the company and the opportunity ahead for them, you can find that at cruxinvestor.com. And we'd love your feedback too. So give us a like, leave your thoughts below, we'll get back to everyone. And if you want to see precisely what we talked about today, take a look in the description below. Gord, how are you, sir?
I'm doing great, Matt. How are you doing?
I'm fantastic. What an absolute sight you are. Your hard hat, high vis, under canvas. What are you doing?
I'm here at the PL mine, and I thought I'd do something a little different for you because I think I don't know if you've been to a mine site before, actually. I don't know if you've been to a site visit.
Steady. Yes, I have.
Okay, excellent. I never see that side of you. So I thought I'm going to bring you virtually to the PL mine site, and I'm going to walk you through basically the project, the exploration potential here, as if you were an investor or a geo team or an engineering team coming to site. And there's certain protocols that we'll go through just to get going. And then we'll start doing some map talk, and I'll walk you through things. So that's what I'm going to do today. I'll dive in. And just start off with Minnova Corp, MCI on the venture exchange. We're here at the PL mine site. It's 100% owned property in central Manitoba. We're about an hour's drive from Flin Flon, Manitoba, the city of Flin Flon, Manitoba. 100 years of mining and development and operations in this camp, in this belt, like literally an hour from us. This was a past producer. It operated 88, 89. We acquired it in 2010, and we've been advancing it for 10 years. First, we started on the mining lease. You can't see it behind me, but there's a 1,000-ton per day mill. About a kilometer to the south of me, there's a decline with 7,000 meters of underground development, past production 350,000 tons. So we started off here on the lease, exploring and basically definition drilling to build up a defendable, legitimate, technically viable mine development plan and resource and reserve. And we did all that. 3 PEAs, 1 positive feasibility study, 2018, very positive, at that time at $1,250 gold, $40 million NPV, 40+% IRR. It was a good little project, 50,000 ounces a year with expansion potential, minimum 5-year mine life. But that was what we needed to do to sort of take the edge off the history of the project. Nobody wants to step onto an old mine and say, why did it shut down? Was it the gold price? Was there something else? There was a whole myriad of factors there, but that's all ancient history. Again, the technical studies that we've done, the subsequent drilling that we've done, the positive feasibility study that we've done. This is a project that is, 2020-ish, ready to go.
Okay, well, look, I think we should reference people to, we'll put some links below here to the 2 previous conversations we've had, because I've kind of grilled you hard on the history and what you've done and what you've been able to do, because you've been at it, like you say, 10 years. So I think people go and look at that if you want to understand business plan, the strategy, the team, and, the game plan for you going forward. I'm interested today, suits and boots. I'll be suits and you can be boots on the ground, and tell us, it's like Puss in Boots. You can tell us, what you're going to do, because you're going to have to deliver value through the drill bit. You've raised $1 million in the middle of last year. You raised some in January again. Money's tight, so you're going to have to make it work really, really hard to get people to start paying attention to this thing. 12 million market cap. I've seen some nice press releases recently, but how are you going to build on them?
Yep. Well, continue to explore and communicate the exploration upside of the project. So I'm going to treat you like you've just come to site. So welcome to the PL mine, Matt. I'm going to just check you in. You need some safety gear to start. You need your hard hat, your glasses. There's your Minnova visitor orange high vis helmet. You need a nice safety vest. Again, lots of visibility. We're all about safety here at PL. I've got some gloves for you because you might come into the field with me and do some work.
Unlikely.
Need some gloves.
Unlikely. Just so you know.
You'll be my assistant, so you'll be carrying the pack, which means you'll be carrying the rocks.
I can do that. That's good.
To get to the rocks, you need a 5-pound sledge, and I'll be nice to you. I'll give you your choice of chisels.
Nice. All that's missing is my high-vis tie.
Well, we're not done yet. Now it gets serious. You need an axe when you go in the bush, and my personal favorite is a machete. It takes care of just about everything. There you go. So you're ready to come into the bush. Oh, I forgot one thing, Matt. You need bear spray, just in case. Not a problem. Oh, one more thing. Flag and tape. You don't want to get lost out there. That's what we do in the field, buddy. So welcome to PL. So what we're going to do now that you're now that you're geared up, if this was a big mining operation, probably sit you down for half an hour and watch a video on safety and who has the right of way when you're walking down the hallway. Here, we're still formal in terms of safety. Obviously, COVID kind of ramped that all up for us, which was terrific in a kind of ironic way. So now on the site, it's safety first all the time, but we're still at that exploration, advanced development stage. Waiting and pushing hard on the financing to develop the full mining operation. But today we're going to talk about exploration. So I'm going to walk you through. Don't worry if you can't see everything behind me. It's all on the website. It's in the presentation on the website, so everybody can kind of reference the higher resolution figures. But this is what would happen if there was a group of geos standing around, and I'm trying to orient everybody to where we are. So. Are you ready to go?
I'm a bit excited. I'm feeling my heart's pounding a little bit here. The tempo is way higher than we normally get. But yeah, crack on.
The idea of a 5-pound sledgehammer. Okay, so right here, this is the PL mill. Okay, so we're standing here. We're standing about there. That's roughly the center of the property of the property area. And that's just a central reference point. So I'm just going to lose this figure here. And I'll give you the broader property picture here. Again, the PL mill. You can see it from Google Earth, Landsat. It's on the mining lease. That's a permitted mining lease, Environment Act 1207E. We're permitted to 1,000 tons per day of underground mining operations. So I'll do the geology in a second, but I'll just reference some geography here. So here's the PL deposit. Here is our satellite Nokomis deposit. We have done literally zero work on that project in 8 years. And it's because we were focused down here at PL, at de-risking and advancing PL. The geology, and I'll show you in a second, there's a large fold here, and then it heads right up there. It's all part of the same package, 8.5 kilometers away. That's 8.5 kilometers of exploration potential to the southeast, and then to the northeast. And then there's the exploration potential further to the northwest and west. So I'll lose this map now, and we'll just get a little bit of geo going here. Bear with me. There we go. So you might be able to see these the red lines here. So again, PL right here with the crossed hammers. The red lines are the structural horizons, the stratigraphic package, and which is the structural package that we're following here at the PL property. So again, you can see that red line trending right up to Nokomis and past Nokomis to the end of our property boundary. So about a year and a half ago, 2 years ago, after we'd done the feasibility study, and we basically, I'd say, de-risked to I think a reasonably sufficient level and detailed a PL mine development plan, right? High IRR and very positive feasibility study, low capex, Canadian $35 million. Then it was time to start looking a little bit further afield. People get that, they can understand NPVs, but I always get the question, what's the exploration upside, Gord? Like, where's the growth for this project? So we started to explore here to the northwest. Prospecting, mapping, sampling, came up with a bunch of new showings, brand new showings. We did literally no work on the property other than on PL for the better part of 8 years, which was tactically to define and refine this past producing asset and bring it into the 2020s or 2010s at that time. So we did all that, and then we could start looking further afield and start considering what are the structural controls of this deposit. How do we follow up on those? How do we explore for those? So I'm going to lose this map here because you're referenced to where we are. So I'm going to start at the west end of the property. I'm up here at this here map. Don't worry about the details. Again, I'll get it up on the website. This is the Nokomis deposit. Hasn't been touched by us for 8 years. And prior to that, it was probably 30 years ago that it was drilled. It's got a 60,000 ounce resource estimate on it. It's basically the same as the PL, shallow dipping. It's a little bit thicker in spots, maybe a little bit more sulfides, but still an attractive project, but it hasn't had any work, right? Not by us, and it hasn't been worked in so long. And I'll sort of demonstrate that with this next map. That's the geology map. Those are the outcrops, some old drill holes, some old trenches on it. That's the drilling results map. Again, don't worry about the super details. It's look at the red blobs. It's still open down dip. It's never really been tested at depth, which was really the case for the PL. So everything here is about drilling, understanding your structural controls, and then drilling. So that's Nokomis. So now let's kind of come back to, I won't go through the whole on strike, but I'll come right back to PL. So I'm going to move that stuff down. And I'm going to see, I might switch to this side. Yeah, there we go. Good. So again, don't worry about the details. It'll be on the website. So this is called the property geology on the mining lease and off the lease to the northwest. So again, the mill sort of central on the lease, and the PL deposit is here. The PL deposit is a 1 kilometer strike length, open in both directions. And and prior to really the last 2.5 years was never drilled outside of that 1 kilometer. We concentrated in here to better understand the structural controls, to better define the resource and ultimately the reserve in the feasibility study. And then we started to basically look outside of the lease, off the lease, on trend, and better understand that. And that's when we started coming up with these new tonalite showings. So the structural package here is you've got a granitic intrusion later. You've got mixed volcanic sedimentary package here, which is intruded by tonalite, a felsic intrusive. And then on the other side of that, you go into more of a clastic sedimentary package, which is all folded, tight, a really tight isoclinal fold right here. And that's about as far as I want to go in the geology with in this particular talk. But the point is that the structures that we've been tracing here for the last 8 years as part of the definition drilling and infill drilling and resource development, we can see them coming off here. They're a little bit different. Now we've got a showing up here and a trend up here we call PL North, right? And that's where we've been focused for the last year. So the results that we've gotten out of PL North, and that PL North trend is literally 250 kilometers from the mill, dipping underneath me right now. And so the results that we've had is we've got very good grades at surface. And then we were understanding the structural controls a little bit more. And then we started to step out a little bit more, go a little bit deeper, and we're still getting pretty reasonable results. We got 2 horizons in parallel. I sort of skipped something here, so I'll just bring it up real quick because it's kind of the same thing. This is actually a cross section through the PL. Again, you've got that volcanic sedimentary terrain package here. It's about 200 meters thick. The tonalite underneath it. The package that has all the mineralized structures here is about 100 meters wide, and we have 4, 5 structures from Sheridan zone, upper, lower, and then sometimes you get a lower. But that same trend, 30-degree dipping, it's still open down dip, it's still open on strike. But what we have here, sorry, get that out of the way, is it changes a little bit here. There's a structural bend in the tonalite here, which was causing some changes in the structural orientation. So it took us a little while to kind of figure out what was going on there. So we never did big step out holes. We were keeping it reasonably tight to learn and interpret. And then after the winter drilling, we really had a lot of success and we're very confident in what we were doing. And then we look back at the old data, and all the old drilling stops literally here, just a little bit, about 150 meters from where I'm standing, like hundreds and hundreds of holes stop there. don't ask me why the historic operators didn't keep on coming this way. At the time, we couldn't go further because we were really constrained. We were staying focused down there. It stopped there. It's open this way. And we found 2 holes in the old database that were beyond the resource, but they identified mineralization at depth, which when we looked at all the detailed drilling that we were doing up here on PL North, they were projecting down, they were lining up. Those structures were, I call it, traceable down the dip plane. So that's Puff 214, which would have been drilled just behind me on the mine, on the mill site, and Puff 265, which is further out in the bush. They both hit, I'd say highly anomalous. You had 3 grams over 1 meter and 2.2x over 1 meter in both these holes. But what it told us was that we could connect potentially or project down all the drilling that we were doing here for the upper zone and the lower zone. So we went out here and we drilled M2148X, which was a hole that we had done several years ago, for a different target, a shallow EM target. And we thought, well, let's deepen that. Let's test. This is the biggest step out hole we've ever done in this property. Like, I had to really, between myself and my senior geologist, Chris Buchanan, we really beat up the analysis and the thesis, because you don't want to miss when you're drilling big step out holes. You want to see results. I want to see results. My shareholders want to see results. So we drilled that hole and we hit the upper zone pretty much spot on the targeted down dip projection. It's super high grade at 101 grams per ton over a half a meter within a 1 meter wide mineralized structure. So that opens up this, again, a huge area here, almost 500 meters on the strike plane and 500 meters down the dip plane, where we can trace the structure. Now we have to go back in here and infill and get the resource. So, or build a resource. So I would expect, given the sort of style of mineralizations, it's basically comparable. The variation in grade from hole to hole, I think we have an opportunity to mirror what we have at the main PL. This, if you look on the long section, I think it's page 16 of the presentation on the website, and you can see the critical mass of the deposit, and basically just mirror that over, just with drilling, right? So this is a huge opportunity for us to, again, demonstrate the exploration upside on the project. And in this particular case, because we're basically underneath the mill, in front of the mill, to very soon increase the resources and the reserves. And then, of course, we've got kilometers of strike length to the west, following the structural trend around the fold, where we've got 1, 2, 3 showings out this direction. Again, we haven't gotten out there for the follow-up work, the planning, the drilling, possibly some geophysics. There's another target out there, which is a possible iron formation target, a banded iron formation, always pretty sexy targets in terms of other deposit models. Like, this is a classic structurally controlled shear zone hosted gold zone. This here is a banded iron formation target, which is more of a chemical trap within that clastic sedimentary package. Looks pretty interesting. There's been evidence of quality on it. We've got 1 hole from, again, 10, 11, 12 years ago, 20 grams over half a meter at 200 meters. Completely out of context. We have to follow up on that. So we've got exploration potential heading up to Nokomis. 8 kilometers, 8.5 kilometers that way. We've got exploration potential on the main PL down dip on strike. We're on the PL North trend heading northwest, and then all the way around the fold them to other prospective targets out there. So we've got lots of exploration potential here. It's just a matter of how we manage that going forward, what kind of programs we put forward.
Well, okay. Well, let me put my hammer and machete down and ask you this: You've not got much money. You're capital constrained. You've got every dollar counts here. I saw the headline, 100, an assay came back as over 101.6 grams came back, narrow vein type stuff, but it captures the imagination, but it hasn't really done much for the stock. You've got a PEA. It's a good PEA. So there's a big disconnect here in the market. You're really excited. I can hear that. Anyone who's been listening to you for the last 15 minutes is going to be excited for you, and you sound like you've got a beginning of a plan, but you need to finance it. You've done a recent private placement. There was a warrant attached to it. in this environment, you would hope that you wouldn't have to do that. There's a disconnect. So what are people not getting that you need them to understand?
Well, I think there's two types of investors out there. The ones that are looking for development and, big, and that's the challenge here. This is not a big development project. It is a viable and very robust development project. We got a 270,000 ounce reserve base, which supports what I call a phase 1 5-year mine plan. We still have to drill more. It's still open. It could be a 10-year mine life. It could be a 20-year mine life. You probably have interviewed guys, and I've been to a lot of mines where you go to them and they started off with 5 years, or in some cases 3 years. 20 years later, 20 years later, they're still going, right? And that's the nature of mining. And in my look, I used to do a lot of banking and analysis. And one of the things that's sort of built into my MO now is not overcapitalizing assets too soon. Like bigger ones, if you're a big company, like if you're Rio Tinto, you're going to go in to a monster project, you're going to sandbag every number. So because there's no pressure on you to get it turned on for capital markets purposes. In our case, I'm actually taking that same kind of philosophy. There's no pressure to push hard and to do a crazy dilutive equity financing, to let the market come to us. The story is here. The asset is real. The exploration potential, I think, is real. I keep pointing to the Northwest and expansion potential. I keep saying it's open to expansion. I'm just trying to pound that message home, and it's legitimate to me. And the last hole, a super high grade hit, at depth, way outside of the current resource. Like spectacular grades, like that's the sort of thing you look for in any project. You want evidence of quality, evidence of traceability, and then it comes down to mineability. So that might be another reason why people don't like this project or don't get it, this project. The shallow dip on it is a challenge. It is not an insurmountable challenge. 30-degree mining has been going on for 100 years. Lots of it going on in South Africa to this day at depth. It's doable. It's been happening in Canada for 100 years, basically, between the Val-d'Or, Rouen, Abitibi camp into Timmins, Kirkland Lake area. There's lots of structures in those mines that are shallow dipping. They get the steep ones, they get the shallow dipping ones, and they go and they chase them down. But what we've got going for us here is that this is 2021, and we've had incredible efforts in industry to innovate and develop new mining equipment and new mining methodologies. And I can name one that's underground at the Lamaque mine with Eldorado right now, which was the Minrail SAMS system, shallow angle mining system. Mark Bouvet runs that company. He's made an incredible amount of progress and has it underground test mining right now. You've got the Muckahi system, which is sort of a brainchild of Fred Stanford of Torex fame, which is another mechanized mining system specifically designed. These are specifically designed systems using proven and probable equipment, hydraulics, rack and pinion, standard components off of anything to do with mining or construction, quite frankly, anywhere, that are engineered to reduce costs, improve efficiencies, and take on the so-called challenges of these sorts of deposits. So that technology is coming along, like it's here today, it's being proven, it's being tested right now and developed. So that's going to make a difference. Again, another reason why we're not in a huge rush to make choices on equipment that maybe aren't the best or the most appropriate when we've got time. Gold price is going up. All my shareholders, my major shareholders and my board, and I suspect you and many of your viewers believe that gold price is going up. So let's let this market play out, which gets back to, we don't need to push hard on the mine side of it. I get lots of inbounds on debt, project finance for it, because the project is super robust. Again, if you go to July 30th, 2020 press release where I highlighted the sensitivity to higher gold prices. So basically the feasibility study sensitized to a higher gold price. Feasibility study was at $1,250 gold. I ran, I got a table in there. You can run it at 18, 19, 2000. The project the NPV is very high. like multiples higher than it was at 1250 gold, obviously. The IRR is approaching 200%. It's a very robust project. Payback went from 1.5 years to 0.6 years. So the project finance is out there for the project. The equity is not there yet, partly because our market cap is too low. I'm not going to dilute my shareholders, for the purpose of turning on the mine if we're not getting valued for the mine. Instead, we can do projects and budgets that are a little bit lower budget. $1 million at a time gets me results, right? All this drilling on PL North, that's results. M21048, that's spectacular results for $1 million. So we can keep chipping away at this with the exploration upside and keep demonstrating it. And I'm pretty confident that in this market, guys are going to start to gravitate. We're in a tier 1 mining jurisdiction, right? Look what's going on around the world, whether it's you got issues in Turkey from an environmental point of view. You got taxation kind of ramifications in some of the very established mining jurisdictions in the world. Here we're in friendly Manitoba. We're literally an hour's drive from a mining mecca for 100 years. And the other thing, Matt, and I don't think people really get this yet, this belt, the Flin Flon, I call it the Flin Flon Snow Lake Belt, a couple of 100 kilometers from one end to the other. Again, a classic, it's like the Abitibi, it's like Val-d'Or-Rouen, Greenstone Belt, Island Arc volcanic system, Island Arc volcanic sedimentary system, intrusive plugs all through it. Probably 30 VMS deposits, 3 gold deposits, 3. Because nobody's explored for gold here. Nobody's explored for structurally controlled gold, which takes boots on the ground in the field with your machete and your sledgehammer, basically mapping and prospecting to find those targets. This belt is relatively unexplored compared to the Abitibi, right? Timmins, Kirkland Lake, or into Quebec, where they've got dozens and dozens of gold mines, big ones and small ones and world-class mines, along with a plethora of VMS deposits. So beyond the project and its structure and its structurally controlled gold resource potential, I see a belt that we're sitting in the front row. And if we can just move this thing a little bit further, like I've got plans, we've already done sort of basic reconnaissance work to step off the property and start picking up ground on prospective structural lineament trends that sort of mirror what we've seen here at PL. Like I think we've got a bit of a leg up. So, so there's a lot of exploration upside right from where I'm standing here to 30 kilometers in either direction. A lot of it's on our property already, but some of it is to be staked up in the future, hopefully by us.
Okay, well, look, let's not get too ahead of ourselves here. What I'm trying to understand as an investor is, you say we're in no hurry. And I can understand that at 12 million market cap, you don't want equity in there. You're going to dilute the heck out of yourself and your shareholders. No one wants that. But you're going to have to take a view on a couple of things. You're going to have to take a view on what price do you think gold's going to need to get to for there to be a reaction on your company? And you've then got to make the assumption that people will be interested in your company, not just because of the gold price, but your ability to get this thing financed. So I think at the heart of this, you're going to need to work out how you bring some kind of structured finance, strategic partner, revenue share, something original and interesting, which gets this thing moving. Because you may not be in a hurry because of the constraints you're under, but I suspect your shareholders probably won't agree. And, if what you say is true behind you, you want to get on with this thing. You want to get on with it.
Yeah.
So what are the options that you are considering that you've been toying around? Come on, you've worked on the street, you know what's going on. So what are the options available to you?
Well, obviously the straight path, and I've said this in a press release from a couple months ago, the paths forward are obviously project finance. And I think I can check a box or two on that. Equity, bit more challenging given our market cap. I was hoping that some of the exploration success might flow through to the share price, to the market capitalization, and just take us up higher so we could properly finance this project. I don't want to go slow, Matt. I don't want to leave anybody with the impression that we're just dragging our heels out here. That's not the case. It's really pushing the project within honestly, I would say more disciplined budgets than I would compare to some of my peer groups out there that maybe have a little bit more money than they are, or they have lots of money and they might not be allocating it as efficiently as I know that we have over the years. But that's neither here nor there. We want to get the project up and running. So, so the other options are more tactical and strategic, right? So what do we got in front of us? We're a tier 1 jurisdiction. We're ready to go with permits. Is there a junior company out there that's looking for another 50,000 ounces plus of production to bump their production profile that wants to do M&A with us? Those things are happening. There's chit chat with that going on all the time. I just don't like our valuation. I keep telling my shareholders, and I keep telling counterparties, I can't transact off of $12 million, not unless I see bump, like serious bump for my shareholders. We've got our one of the metrics out there, EV per resource ounce. We're trading at $15-16 per resource ounce right now, with a mill, with a permit, exploration upside. Tier 1 jurisdiction. I got peer group companies out there that are, I think the average is $70. They don't have a permit. They don't have a mill. They don't have these things. Maybe they've got a little bit, maybe a jurisdictional issue or something like that. But that comes with understanding. Like, look at the main player in this camp, Hud Bay. They're running Lalor mine right now, and that's really being sort of spun as a gold project, right? So they're more focused on gold nowadays in this belt because they spent 100 years looking for the base metals, so they're focused on the gold right now. So there's the tactical, there's a sale of the project, M&A. Then there's the possibility of a merger of call it equals, like a $12 million company. It's not so much that we're undervalued. We're just under the radar, right? We're not getting views by broader audiences that have criteria that are okay. I only look at things that are 1 million ounces or higher. I only look at things that are 100,000 ounces of production or higher. I only look at things that are high grade. Oh, we can check that box. I only look at things that are advanced in tier 1. Oh, I can check that box, and I can check. We're just missing size. I would hope that the exploration upside would help people to kind of go, you know what, I'm gonna lower my bar. I'm gonna look at this 700,000 ounce resource because it's got everything else ticked off in a tier 1 jurisdiction. Why wouldn't I look at that? I can beat it up. Every day I'm on the phone with 1 or 2 new investors that have inbounded me, and I've yet to have one person or anybody say to me, there's something not right here, Gord. I can't. I don't like your project because, right? I like these other projects out there. They all come away going, this sounds really attractive. This sounds really advanced. This sounds really doable. So what's the missing point? And we basically debate it like you and I might debate it here. Like, what is it? I personally think that it's the market metrics, different market metrics and scale that many investors are seeking nowadays. They want big, big, big. What I can deliver right here, right now is viable, fast to production, robust, and then take that cash flow. At current prices, cash flow in the first 3 years, after-tax free cash flow in the first 3 years is $150 million. So I can, and that's include. Okay, so I have to pay back the debt, pay back the capex on the project. So I still got $120 million to invest in this project for my shareholders to expand the resource, expand the reserves, to lengthen the mine life. Then my NPV goes up. To boost the production, my NPV goes up, my production goes up, and my cash flow goes up. So that's the sort of thought process that we're working off of here versus somebody that's maybe looking at that 1 million ounce plus or the multi-million ounce plus. So I hope that kind of explains what we're doing here and why we've been doing it. And now the shift. Now there's a bit of a shift. Exploration push, really highlight that for investors, because again, there's 2 groups out there. Developers, NPV investors, NPV per share. And then there's the guys that are more speculative. I want to know where that next ounce is coming from. I want to know if this thing can be a 10-bagger. When you pull a hole like that on a trend that's already got 700,000 ounces defined 500 meters to the south, I think you got to be speculating. Well, there's got to be more. Right, and that's what I know. That's what I feel right now, based on the near surface, the projection down, and the projection along strike. I think we've got a very solid value proposition for anybody else.
Okay, I think you've definitely done all the selling points on the geology and the drilling that you want to do. You have mentioned recently, and people have asked us about it, you've been talking about metallurgy and ore sorting. Is that, again, is that a distraction right now?
No, it's just part of it. It's just one of the many technical programs that go with the development side of things. Thank you for bringing that up, actually. So what this project has, I'd say, compared to other projects, it's got lots of optionality on how it's developed, right? Because we're not constrained. We've got excess capacity in the mill, but how do we develop the project to keep CapEx down, to improve every aspect of the project? The ore sorting, that technology is here today. It's being put into practice. It's being incorporated into many other technical studies. So when you're dealing with narrow vein deposits, and you're obviously going to take on dilution that you'd prefer not to take on, does ore sorting work for that to basically eliminate the waste so it doesn't have to go through the mill, to upgrade the material, the ores going into the mill? Yeah, that can work here very well. Our ores are very classic, pyrite, pyrrhotite, arsenopyrite, non-refractory, and gold in a quartz vein system with biotite, mostly biotite alteration, be like a quartz muscovite system in the Abitibi. So that can work for us. It also has development optionality in terms of one of the things we're looking at as part of the development side of the plan is a new portal here just on the PL North, where we can shorten the overall development timeline, the distance, the cost, and it exposes us to higher grade ore. The old operation, like one of the reasons the old operation failed, and you can see this visually in the presentation, again, on the longitudinal, the original decline basically went into what is I would say a less significant part of the ore body. They didn't have the full ore body drilled off at the time, and most of the ore is actually up here towards the mill. So our plan there is to use that portal, but come back to the north. But the work, the many successes at defining the PL North trend here, just in front of the mill, it gives us the opportunity to consider doing the opposite, doing a new portal, going back to the southeast. And then at some point, we can connect to the other portal. And then we've got a nice, efficient mine with a south portal, a north portal that is closer to the mill. So everything can go in at the south end. Ore and waste can come out at this end and be closer to the mill. So it's so it's not a distraction. It is one of the many aspects of a project. Matt, I can't emphasize enough. You don't build mines from boardrooms. You've got to be on the ground to kind of see what you have to work with. That's a component of it, of course. But when you get here and you see what you have to work with, you get a real spatial sense. In this case, all that optionality on how to develop this mine, I think is ultimately going to deliver a better economic result for shareholders.
Okay, drilling, exploration. Any more assay results, Stu?
Well, one of the reasons I'm up here now is and this is another, since you're on the field visit with me, we didn't go down to the core shack, but what you typically do and the way we operate, and this goes back to my training, you do your drill program, you get hundreds of samples out. They come back to you always a week or two later than you wanted them to. You process them for QA, QC, get them into the database, double check, make sure everything is good. All your standards are good. And then you go through the logs. Okay. So this would be you and me going through the logs, or in my case, my senior geo, we go through the logs and we go, hey, that's funny. We got a high grade hit here, but we don't have bracket samples on that. Like you obviously sampled it for a reason. Yeah, there's a small quartz vein. I didn't see super mineralization, and it wasn't in one of the exact trends that we were looking for, but it was anomalous. So I sampled it. Okay, so you got a 0.5 meter of 3 grams. That's pretty interesting when you've got, meters on that side and meters on that side that are ore perhaps. So after you do that, Matt, you basically go back to that. I'll go back to the core shack later today. I'll pull those boxes. I'll basically sort of mini log it, and then we'll cut bracket samples around that. So I'll have another batch of samples going into the lab probably next week from this follow-up work it happens on every project. Quite frankly, it should. In our case, we're always finding more mineralized structures. So when I was talking about the veins, the structures here on this map here, there's the main structures that we can trace out very well. And then the same thing here at PL. We got an upper and a lower, and we can trace those out hundreds of meters now. But there's always these intermediate structures, and you can see some of them here, where you don't have the density of drilling to connect them yet. They're there, but they're not sitting on what you consider to be the main structure. And again, sort of opens up that, what's going on here? More drilling, more detail, and we could have another structure going through there. So all those samples have to be kind of this, thoughtfully, analyzed and interpreted to get ready for the next program. And that's what we're doing right now. We're getting ready for that next program. So the next program coming up here, we will start drilling in the summertime. We will do more mapping and prospecting along to the northwest, and I'm hoping I can get to Nokomis this summer to get some level of boots on the ground work there, because I want to advance it into the mine plan, right? And that'll also include the first stage of permitting for Nokomis, an archaeological study. I get to engage the First Nations. We do that sort of first pass permitting, because that's not on the permitted lease, and that can come into the mindset. That's another 2 years of, based on what it is right now, 2 or 3 years of mine life. So we've got all kinds of optionality out there. I'd be remiss to say, that like many companies nowadays, bigger ones obviously, but even little guys like us, we pay attention to ESG, good corporate governance. We communicate with our local communities, I'd say on a quarterly basis, unless I bump into them in town or something. So we keep the community councils up to date, the Chamber of Commerce up to date, the First Nations reserves up to date. So, we're on top of all of that. We're in contact with the regulatory agencies constantly in terms of managing, everything about this site. Like, we're responsible for everything on this site, from the diesel to the gasoline to the garbage to the to the wastewater and sewage. All that stuff has to be managed properly, certainly nowadays. And we always have, but I just mentioned that because some shareholders and investors want to know that we are on top of that, and we certainly are.
Brilliant. Like, Gord, I appreciate the format today. I really enjoyed it, actually. If I felt like I was there. And I also need to say this in public: I can be bought very cheap with branded clothing, but I'm excited.
I'll get you an embroidered Dickies.
Right. Good news. I'm not sure we have that brand over here. But look, you're busy. You've got a plan. I like that. I'm very keen to see what these assay results say, because that could be meaningful. People could start to pay attention if they give the kind of grades that, well, certainly from the last 101.6 grams per ton. That's pretty impressive stuff. So look, stay in touch. Let us know how you get on, and we'll speak soon. Okay.
Yep. End of the summer, Matt. Thanks very much for your time. Always appreciate you and your audience.